The Reserve Bank is worried that a pickup in economic growth could undermine efforts to reduce inflation. Joe Biden and Kamala Harris get hero receptions at the Democratic National Convention, and the vintage car market crashes. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Wednesday, the 21st of August, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, the main story this morning, a forecast pickup in economic growth has increased the risk that inflation could become entrenched, meaning that interest rates will need to stay higher for longer. This is all according to, of course, the minutes of the Reserve Bank's latest board meeting.
Yeah, so the minutes weren't supposed to surprise anyone, but they came out yesterday and people really were a little shocked about how serious the Reserve Bank is taking the threat of this stronger growth. The minutes say the central bank board considered lifting the cash rate to 4.6% from 4.35% at its August 5-6 meeting, fearing the economy is still too hot and inflation is no longer falling as rapidly as before. Analysts said the minutes show that the Reserve Bank is even more concerned about higher inflation than previously thought. While the Reserve Bank board ultimately kept the cash rate on hold at 4.35% in August, the minutes show the board judged this would only be possible if the central bank committed to keeping higher interest rates in place until next year. Now, remember, after the decision, the Governor, Michelle Bullock, effectively ruled out cutting rates before Christmas at the post-board meeting press conference. The comments were very much in contrast to bond market pricing that had a rate cut embedded for later this year. The Reserve Bank said it is concerned about the enduring strength of the economy and a looming increase in economic growth, which it expects to hit an annual rate of 2.6% by the middle of next year, up from just over 1% presently. According to a report in the Financial Review, the bank's saying that while household spending growth has eased sharply since the bank started raising rates back in May 2022, the central bank staff expect household spending to pick up thanks to the Stage 3 tax cuts. The outlook for government spending has also strengthened, the minutes said.
So, Sean, we knew the Reserve Bank was serious about inflation because it comes up after every meeting. But the minutes suggest they are really serious, or even perhaps worried that not enough has been done to push the pace of price rises lower.
Yeah, that was really the surprise out of yesterday. A few things came out of the minutes and sort of you put them together with comments over the recent weeks, you start to get the picture of what's going on inside Martin Place. The Reserve Bank just isn't sure of what's going on. I suppose that's what's clear. The minutes yesterday used the word uncertain 13 times. And the Reserve Bank board stressed its decisions would evolve in line with data. Also, the post-board meeting announcement 2 weeks ago triggered a bit of a furor between the central bank and the government, with commentators saying the Reserve Bank had inferred that government spending was too strong to get inflation lower. Now, on Friday, Ms. Bullock said public demand isn't the main game at the moment. Having said that, there's plenty else in those minutes. And other commentary during the last fortnight or so to suggest that it's still part of the game. The commentary in board minutes has helped the Aussie dollar, which is trading back above 67 US cents. If you really want to watch what people think is going to happen to interest rates relative to other economies, watch the currency, and the Aussie dollar is back above 67 US cents. Apart from brief periods in July and around Christmas, the currency hasn't been at this level in a couple of years.
Sean, it's interesting. You add into that then as well the comments by Deputy Governor Andrew Hauser last week, where he was criticising certain economic commentators for being too certain, really, or too specific in their forecasts. And this general theme of uncertainty really just feels like that is what the Reserve Bank is trying to ram home at the moment.
Yeah, one thing I would say, which is a little ironic, Andrew Hauser was talking about how uncertain it is and the Reserve Bank's talking about it, yet the bank then comes out and says, so we're not going to do anything till next year. Now, it got itself into all sorts of trouble when Phil Lowe said interest rates won't rise until 2024. This was early 2022, and later that year they actually started lifting interest rates. So the fact that they're now putting a time frame on it is a little surprising. You would have thought that they had their fingers burnt previously, but, well, clearly they're jumping back into the fire.
Yeah, it would seem that way, wouldn't it? All right, local markets, how did they perform yesterday?
The S&P ASX 200 finished up slightly to 7,998 points, having earlier in the day pushed through the 8,000-point barrier. Broadly, the tech stocks did well and the real estate companies did poorly, though most of the big moves were earnings related. WiseTech Global BHP, Fortescue Metals were among the best performers. Goodman Group, Aristocrat, Leisure, the laggards. The big banks were mixed. So too the big retailers. Plenty. Look, I'll run through a few of these smaller results. We'll go through some of the larger ones later in the show. Rip Curl and Kathmandu owner KMD Brands reported a slight improvement in recent months, but sales for the full year to July 31 fell 11% across its brands. Its share price, though, jumped 7% on the news that more recently sales have been a bit stronger. Plumbing supplies group Reliance Worldwide Corporation was among the best on the day, up 9% after posting better than expected results from its US operations. Retailer Baby Bunting jumped 9% after saying sales at the start of this financial year were improving. And lender Judo Bank said small and medium-sized businesses, once resilient to high interest rates, are starting to buckle as lower consumer and demand begins to bite. Its share price jumped more than 10% yesterday. Finally, tech company Appen. It came out and told the stock exchange it has no explanation for its shares jumping 50% in the past few sessions. Now, Appen closed 8% higher yesterday, more than 50% over the last 5 sessions, 160% since late last month. Appen's not sure why.
Very curious. Quick mention, Sean, before we get to international markets, of the Fear and Greed newsletter, which comes out today. I've got no idea why I'm mentioning it now.
Why not?
Why not, indeed?
You're excited about it.
We are. We get very excited about this on a Wednesday because the Fear and Greed newsletter is some of your finest work. It is some of the kind of the inner workings of the mind of Sean Aylmer, which is a dark and dangerous place at times. If you head along to fearandgreed.com.au. You can pop your email address in. You will get the weekly newsletter when it comes out mid-morning. It's in a couple of hours' time, mid-Wednesday morning, every week. Email address, entirely free. There you go. I just really went to dot points there, didn't I, Sean?
You did go to dot points, that's right. Oh, look, plenty of interesting stuff. Talk a bit about earnings today, a bit about the economy today, you know, the US. We've had some really quirky stories in the last week too. Should we talk about them too?
I look forward to this. Anyway, back on track. International markets, what's happening?
Gold remains around $2,500 an ounce. Now, US Federal Reserve Chair Jerome Powell is due to speak later in the week at the Fed's annual Jackson Hole Symposium. Much of the focus will be on not just whether the Fed will cut rates, because they will, but how many times they might cut. Expectations of several cuts has helped gold. Hence, it's staying around that $2,500 an ounce level. Little aside here, Michael. A gold bar typically weighs about 400 ounces. So, at $2,500 an ounce, a gold bar is now worth $1 million. There you go.
I'm glad you told me. I was there just trying to figure this out quickly. 400 times 2,500. I wouldn't have hit $1 million.
You would have, Michael.
The things I should not admit in public. Please, Sean, save me. Go on.
Oil prices, they remain relatively low at around $78 a barrel after there were some promising signs that the Middle East crisis was de-escalating. Fingers crossed there.
And after the show, Sean, stick around. We've got an interview coming up with Rachel Wastel, personal finance expert at financial comparison site Mozo.
Yes, it's a fascinating chat about what's happening in the credit card industry and how the buy now, pay later sector is kind of changing the dynamics of it. So Mozo's done some work. I think it was almost 200 credit cards they've looked at. And she talks about fees and interest rates, kind of the best ones to use for different people. But then also this role the buy now, pay later is playing in the market. It's a really interesting chat.
Yeah, it sure is. It is coming up after the show, so stick around for that one. We'll be back in a moment with the rest of the day's business news. Sean, Australian and Indonesian troops will be able to operate from each other's countries under a new defence cooperation pact that's been billed as the most significant agreement ever to be reached between the two neighbours.
Not that we want to over-egg it here. The treaty-level agreement finalised between Indonesia's President-elect Prabowo Subianto and Defence Minister Richard Marles yesterday will allow reciprocal access by each country to the other's military facilities, delivering unprecedented joint training opportunities. Prabowo hailed the very good agreement. That's what he called it, very good, as he urged further Australian support to bolster the nation's economic security, develop its agricultural sector, and fight Indo's serious problem with drugs and narcotics, according to a report in The Australian. Prime Minister Anthony Albanese, who hosted his soon-to-be counterpart at a meeting with senior Australian ministers, said the agreement was a breakthrough in the nation's bilateral relationship.
I'm there calling it the most significant agreement ever. All of the hyperbole in the world, and he describes it as a very good agreement. Just feels like he dialed it back a little bit there.
Maybe.
Sean, the share of Australians enrolled to vote has reached a near record, with pre-election enrolment now at its highest level of all time.
This is good news. Official figures released by the Australian Electoral Commission show 97.9% of all eligible Australians are enrolled to vote. That figure is higher than the proportion leading into the previous federal election back in 2022. It was 96.2% then. An estimated 92.9% of Indigenous Australians are now enrolled to vote, significantly higher than the 79.3% leading into the last federal poll.
Property investor, developer and fund manager Dexus posted a $1.58 billion loss for its 2024 financial year, deepening the previous year's loss after recording huge devaluations across its portfolio.
Yes, some very big numbers in this one. In 2023, Dexus's loss was $753 million. The significant worsening in 2024 reflects higher interest rates triggering a reduction in the future value of properties. The result sent Dexus's share price down 9%. If you exclude the changes in valuations, Dexus's funds from operations was $516 million, which was about in line with guidance. The group warned that next year's earnings would fall. Like many of the property groups, Dexus has been transforming, trying to diversify its assets base, pushing into other types of property, student housing, healthcare, infrastructure. It's also boosted its funds management business with co-investment with partners now a key strategy. For example, Dexus is co-investing with Atlassian for the technology group's new headquarters in Sydney.
And Sean, there was some good news in the property sector. Vicinity, which owns shopping centres including Chadstone in Melbourne and the QVB in Sydney, said that occupancy rates are back to their highest level since before the pandemic.
We should celebrate this, don't you reckon?
That is significantly good news, Sean.
It is, and it's coming despite slowing sales amid the cost of living crisis. The group's statutory profit more than doubled to $547 million, and its share price ended up 1% yesterday. Chief Executive Peter Huddle said Vicinity was writing longer leasing deals, averaging 3.6 years, up from 3.3 years. On the property front, capitalisation rates, which is a bit like investment yields, were showing signs of stabilising, not falling anymore. This strong leasing activity lifted occupancy rates across Vicinity's 57 assets worth $23.2 billion to 99.3%. That's the highest level since before the pandemic. Occupancy at its CBD malls, including Emporium Melbourne and the Queen Victoria building in Sydney, hit 99.6%, which is actually higher than before the pandemic.
Sean, medical glove and protective surgical suits maker Ansell, a COVID-19 favourite among investors, has cut almost 10% of its global workforce as many of its factories step up the use of automation.
Chief Executive Neil Salmon said there had been some cuts from each one of its 14 factories, and there was more cost cutting to come beyond the 1,330 people who were made redundant. The reductions are 90% complete, he told the Australian Financial Review. Shares in Ansell climbed 9%, though it is more than 25% off its peak during the pandemic. Mr. Salmon also outlined that a glut of medical gloves and other PPE that occurred in the COVID-19 pandemic had been all but whittled away, except in small pockets of the market. Mr. Salmon said the job shedding in part was a result of the company playing catch-up in bringing more automation and robotics into its factories.
And one more, Sean, before we get to international news. Coal miner Yancoal is cashed up and ready to buy assets such as Anglo American's Queensland coal mines.
The group made a half-year profit of $520 million, but rather than pay out a dividend, as per usual, the board decided to hold onto the money, lifting the group's cash balance to $1.55 billion with no debt. Quite incredible. The board made it clear it's looking for high-quality acquisition opportunities, and alongside the lack of dividend was the main reason Yancoal's share price tumbled 15% yesterday. Now, Yancoal's constitution says that 50% of net profit must be returned to shareholders as dividends every year, but the directors have the right to rescind a dividend if they feel the company's financial position no longer justifies it. Yancoal Chief Executive David Moult has previously said he wants to buy assets, particularly high-quality coking coal mines for steel making in Queensland, but it is quite drastic to just dump the dividend totally, particularly when you have so much cash on your balance sheet.
Yeah, indeed. Now, international news, Sean. US President Joe Biden defended his legacy in a really quite a lengthy valedictory speech to the Democratic National Convention yesterday, saying his presidency reunited the country after the divisiveness of the Trump years.
And Mr. Biden called on the convention to support Kamala Harris as his successor, saying choosing her as his vice president was, and I quote, the best decision I made in my whole career, end quote. According to a report in the Financial Times, Mr. Biden argued he had set the country on a solid economic course and touted foreign policy successes, especially the expansion of NATO and help for Ukraine against Russia's invasion. His remarks came shortly after Ms. Harris made a surprise appearance at the convention, hailing Biden's lifetime of service. The convention came against a backdrop of protests in Chicago against Biden's support for Israel in Gaza, with thousands of police deployed on the streets and a wide security cordon erected around the conference venue. Biden was due to fly out of Chicago after his speech. He's going to skip the rest of the convention. Very unusual for that to happen for a sitting president. It will culminate on Thursday, US time, with Harris's formal nomination as the Democratic presidential candidate. Other big name speakers this week will include former Presidents Barack Obama and Bill Clinton, and Harris's running mate, Minnesota Governor Tim Walz.
Sean, I was watching the speeches yesterday, the live stream of the convention, and I saw Joe Biden's daughter introduce him. And she introduced him very well, and then the president came out and they embraced, and there was a lot of tears. It was quite an emotional moment, really. And then the standing ovation started, and it went
Didn't
on.
stop.
and on and on. Once it got to 2.5 minutes, I'm like, I reckon I got time to make a cup of tea here. So I ducked out, came back and forgotten that I had turned on the stream. And so suddenly I just hear this voice coming out of my office. I'm like, what's going on? Someone's in there. It was Joe Biden in full flight.
Wow.
And he was really getting stuck in.
He was. And, you wonder, I think the fact that they've shifted gears and gone for Kamala Harris is a good thing. But when you see Joe Biden yesterday, you kind of understand what a forceful speaker he can be.
Yeah, indeed. So, it was a really interesting speech to watch, but my goodness, that was a very long
Quite the ovation.
Yes, indeed. Sean, I've been looking forward to this one. Higher interest rates and the cost of living crisis is hitting one attractive but somewhat expensive hobby, vintage car collection.
Yes, we're in the middle of the vintage auction season in the US. And for the week ending Saturday, auction sales were down 8% from last year to $371 million. However, they were way below the 2022 bumper year, where sales were $469 million, according to Haggerty Inc. Now, I've got to tell you, I had no idea it was auction season for vintage cars, but it actually gets quite interesting. Half of the vehicles failed to realise their low price estimate. Not helping is the large number of vintage cars on the market at the moment. The good news is that after auction deals are pushing final sales higher. Now, it just seems, according to a report on Bloomberg, that people aren't rushing to buy vintage cars anymore. Of the top 10 sales of the week, 6 were Ferraris. That is undoubtedly the number one brand. The top seller among 5 auction houses was a 1960 Ferrari 250 Spider. $17 million US, including the buyer's premium. Sotheby's sold that one. Not bad. It was better than its low estimate of $16 million, so that was good. The next best was a 1938 Alfa Romeo that had actually been stolen and then recovered. I think it was a Spider as well. No, I don't know much about vintage cars, but why is Alfa Romeo and Ferrari both got Spiders? Anyway, it went for $14 million, including fees.
Oh, what a story. $14 million for an Alfa. Gosh, Alfas are nice cars, aren't they?
But you feel like you need to be on a movie set to drive one.
Yeah.
Otherwise, everyone's just going to drive around and go, what a wanker. And I'm like, yeah, that's me.
I've had 2 Alphas, Sean. Thank you for that.
Was one of them a 1938 Alpha?
No.
But you'll find that. So I've driven Alphas. But the other thing about Alphas that I found really difficult was that the pedals are always so close together. And if you've got big, clumsy feet like me, they're actually quite hard to drive.
Yeah, Sean Clubfoot Aylmer in there,
that's it,
smashing everything.
Yeah,
goodness me. You've hurt my feelings now, Sean. You
Sorry.
effectively called me a wanker, which is actually fairly consistent with what you do off air as well.
Hmm.
Up next is the Fear and Greed Daily interview with Rachel Wastel, personal finance expert at financial comparison site Mozo. That is quite a mouthful, Sean.
It sure is all about credit cards. They've looked at almost 200 credit cards, compared interest rates, fees, how the buy now, pay later sector impacts the credit card sector. It's a great chat.
Yeah, it really is. It is up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And also worth a listen today is the new episode of How Do They Afford That, which is out every Wednesday. Today's episode, Sean, is all about 6 side hustles that you may not have considered.
Right.
Which is interesting, especially because I disagree with Canna on one of them. I disagree.
Podcasting.
Oh, no. The side hustle's short of things that you make money from.
Yeah, good point.
There you go. Anyway, check it out. It does get a little bit heated in the studio. It's worth a listen just for that reason. Thank you very much, Sean.
Thank you, Michael.
It is Wednesday, the 21st of August, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.